In this video, I'm going to be going over my biggest trade of the year so far on the ticker Joby, Joby. This was a 800% trade and the stock is still running to this day. Now, this trade is going to cover exactly how I found this setup, what I was looking for within the market, how to spot these themes before they start to actually run, and how to manage trades while you're actually in them, obviously knowing when to enter, where to exit, because that's the most important part. A lot of people, they end up taking a good trade, but they exit out of the trade too soon. So this video is going to help you kind of know exactly how to be able to hold a trade for a long period of time, how to scale out, how to lock in profits, and not just pray that things go up. And this is going to cover basically everything, so you'll be able to find these trades in the future and be able to catch these later on. So make sure to take some notes on this. Remember everything that was going on in this trade, because you're going to be able to find exactly the same setups like this, and they come every so often. So you have to make sure you look for the best setups, and I'm going to review why I think this was an A+ setup, and these are the types of setups that you should be looking for some of the biggest gains within the market. And remember, all you need is 5 to 10 of these trades per year to make your year. You don't need them every single day. You're just following a system that provides you with some of the best probabilities to catch big trades like this using momentum, swinging, and trading breakouts out of massive bases. Let's get straight into it, and I hope everyone is able to learn from this video. Let's go. All right, guys, so the first thing you want to do, you need to look at the markets before taking any trade and kind of looking to see where we are in the market cycle. What I mean by that is sometimes the markets are going to have very, very big moves after breaking out of big bases. That's what you want to see, and you want the markets to obviously be trending. So before I took this trade, obviously I had to kind of get an idea of what the market conditions were, and this trade that I took was right here on June 26th. So I took it on this day right here. This was what tech was doing, QQQ, which is the tech index, because I traded a tech stock, right? So when you're trading tech stocks, you want to look at the major market index that correlates to tech. So this one was obviously on this day right here, we were breaking out over the previous all-time high. So you can see this is the all-time high. We made a big base, we reversed off the lows, and then we set up and broke out over that spot. And the market just looked like it had momentum. So whenever the market is breaking out and breaking through a previous key level of resistance, usually the market is going to have some pretty good momentum to make a very big move up. So that gives me some confidence that this stock can probably make a very big move up. And that's kind of what I was looking for in the markets. Now, keep in mind, again, we have to be trending for you to be wanting to take longs, right? So if we're above the moving averages, you want to look to long. If we're below the moving averages and downtrending, this is when you'd look to potentially short stocks or just, stay out of the market. Maybe wait for better conditions, wait for a better environment. But when the market is super strong like this, that's when you want to be long stocks in the market. So the actual trade that I took was on the ticker Joby. And you could see, over the last few days, it has gone almost like parabolic. And my entry on this one was right here. So I always like to start on stocks on the weekly time frame. This is something a lot of traders don't do. And they don't realize that the bigger their time frame, actually the bigger the move that is going to happen. So if you have a massive weekly setup and a massive weekly base, when the stock breaks out of that massive weekly base, that's when the big move is going to occur. Not when it breaks out on the hourly, not when it breaks out on the 15-minute. The weekly and the daily are the most important. So if you're not starting to scan your stocks on the weekly, you're already missing out on a ton of potential for stocks. And this is where some of the biggest moves occur. So what this is called is a stage one base. A stage one base basically means when institutions start accumulating a position in a stock and it sets up to run into stage two, which is one of the most powerful stages within the market. What I usually like to look for and do is trade stage one stocks that are kind of coming out of that stage one base and entering a stage two where they start getting a ton of volume and having massive moves. So this is what I was looking at for this ticker. You could see again a massive weekly base, and this was a part of the aerospace and defense sector, right? So when I click on the sector, you could see it comes up right here, and this sector had an absolutely amazing performance over the last year to date, right? If you look at the year to date, these stocks in the sector are almost all up over 50, 30, 40, 50, 60%. So this is a massively strong sector. And you could see each stock here under the sector is very, very strong. And this is what I look for. I look to scan if the overall sector is very, very strong. I want to know what the sector is doing. I want to know the performance of the overall sector. And aerospace and defense has been super, super, super strong. So this kind of gave me an idea that there was a theme here. I also looked at a few of its, other uh, names within the sector like RKLB. This one was breaking out of a massive base on the weekly as well, and it looked like Jobby just needed to catch up. But this is how you find some of the strongest themes and sectors. You could see another stock right here, ASTS. This was another, stock that's breaking out on the weekly time frame. You can see it broke out of this big weekly kind of base right here, made a massive move up, then set up, then made another big move up. And this is how stocks move. They move within these kind of stages and cycles like this and make a nice leg up, go sideways and make the next leg up. And these are the types of stocks that you want to trade. So the moment you start noticing that this stock is within theme and it has a very, very nice theme is when you can kind of get an idea that, okay, this is the sector that I want to be trading and there's good potential for this to make a big move. So I found out that the sector was strong. It had a big weekly base. And now all you have to do is make sure you nail down an entry. So what I was looking for this one on the daily time frame, because those are the setups that I look at for my entry, is you can see right here, the stock made an ignition candle move up. So what that means is there's a ton of volume as the stock makes a move up. Here, there was some news that Toyota took a stake in the company, and that obviously, brings in buyers and that brings in a ton of volume. And what I look for is just a simple continuation pattern. You don't want to chase it here, right? You want to wait for the stock to set up. So it goes up on the news, then it starts going sideways and it builds out a base, and then it broke out again and gapped up, then made the next leg up. Now, I wasn't able to catch this either, right? So instead of chasing here like most traders do, you just have to wait for the setup, right? You have to be patient. Again, remember, this is a daily time frame, so it might take about a week, it might take about a week and a half or 2 weeks, but the setup always comes when a stock is ready to make a continuation move. And right here, you could see was the perfect setup. And why was this the perfect setup? Because the stock had just gone up on a ton of volume. The volume was declining as the stock had set up into the key moving averages. So you could see the 821 EMAs are below, which are going to be your kind of momentum gouge for the stock. So whenever the stock kind of comes back to the 8 and 21 EMAs, that's usually when it wants to make its next leg up. Then it was setting up in a tight daily wedge like so, and it had a lot of volume as it was breaking out, right? So again, it started to get some volume here as it started to break out and try to push out of this wedge, which it ended up doing. So this is where I started to get interested in the stock. This day right here, it actually finally broke out. And what I used for my entry, which is very simply previous day's high right here, but also a key level, right? So whenever you're looking at your entries, you always want to use a key level of resistance or support. Support, obviously, if you're looking to buy puts, resistance if you're looking to buy calls, a break over that level. So this is called, for me, a trigger level. It makes it super simple to enter. Whenever the stock breaks above the level, that is when you're going to enter. So right here, you had resistance, resistance, resistance. So this is why I use this as my trigger level. It was also the previous day's high right there. So now all you have to look for is a break above that level with volume. You never want to overcomplicate your entry. Your setup should be so good that your entry is super simple and smooth, and you're just able to execute it without overthinking, without guessing yourself, without doubting that the setup is not there. As long as the setup is great, you have a weekly base, you have a daily base, and you have a theme and a strong stock that is leading within the theme. That's all you need, right? From there is where you're going to take your entry. So now you can come down to the smaller time frames. Everything we just did before was on the weekly, daily time frame, and now we want to come down to the lower time frames. I like to use either the 15-minute or the 5-minute, right, for my entries. Now, right here, you could see the stock ends up starting to get some really good volume, and then it breaks our level right here, but it has kind of, some struggles to get above this spot. So right off the bat, I'm not really taking my entry here, especially because we are a little bit extended off the low. So what I personally did for this was I waited for it to come back in, because again, stocks don't just go straight up, right? So you never want to chase your entry, even if it's breaking your key level. If the stock is just going straight up here, you want to just wait for the pullback. Just like we talked about the daily, it's going to set up. You can see this one set up right here, declining volume, and then boom, right as it broke out again, broke the key level, looked like it was very, very strong as it was breaking it and had a lot of volume. That is when I bought it right here on this candle, right? So obviously you could buy here, but I prefer to wait for the setup into the key moving averages on the lower time frames, and then boom, enter right here. You can see volume is backing. There's a lot of volume here, and there's also a lot of volume here that confirms. And then from there, you could see the whole time a lot of volume on the stock, which is exactly what we want to see. That's going to be your confirmation. Now, for the trade, where does your stop loss go? It goes to the low of the day, right? Of the day that you entered. So if I entered on this day right here, this was the low of the day. That's going to be my stop. As long as the stock doesn't come down here, I'm holding the stock no matter what because it's not hitting my stop loss. From there, once we enter the trade, we want to look for a target, right? So we need to have a target for the trade, and it needs to make sense in terms of risk to reward. So if this is the stop loss that I'm using at the low of the day, what I want to do is at least target a 2 risk to reward. So I'll use this long tool right here on TradingView, and this is going to be my entry. This is going to be my stop. My first target should be at least like a 2 risk to reward, which is exactly what I did, right? I used this level right here, and that was a 2.8 risk to reward. So this was my target because it was breaking out of the wedge. Obviously, we want to target the most recent high. A lot of people don't know where to put their targets. All you want to do is just look for key levels of resistance. Look at highs, look at lows, right? Why is that important? Because that's where price made a big pivot, right? So right here, for example, we had a big rejection at the high, price pivoted, moved down. So what do we think is going to happen when it hits again? It's probably going to start facing some resistance. So that is my first target. Now, do not take all your profits at the first target, because what's going to happen is the stock is going to end up running once and you're going to miss everything. So what you want to do is called a scale out or a trim. A trim basically means you sell out of a position as it goes up in your favor, but you don't sell it all right away, because obviously if you do, you're going to end up missing the bulk of the move. So what I like to do is pick a few targets for my trade. So I like to have TP1. This is where I sell 25% of the position. TP2, which would mean the second target, I sell another 25% of the position, and then a third target. So what do? You go all the way back, right? And then you look at where the next level is. So for me, this and this were the two targets that I had. And then my final target for this trade was actually the all-time high right there, right? So I had 3 targets, and you could see it ends up running all the way up to this level right here. And it ends up being a 17 risk to reward, which is absolutely insane. If you can get a 17 risk to reward, that means you risk $100 to make, $1,700, which is exactly what ended up happening in this trade. I'm up about 1,000% on the trade. $25,000, $25,000 to $30,000 so far on the trade. I haven't even closed all of it out yet as it continues to run, so it could be even more. And this is really all you need. And the crazy part is I didn't really even have that much size on this trade. I'm only in like $3,000 to $4,000 on the trade, but since it runs about 1,800%, you see the exponential returns that you start to get, especially if you're leveraging options and you're doing it the correct way. So the main things I wanted you to take away from this video is you have to trade leading stocks and leading themes. You have to make sure you don't sell your winners too early. You have to hold the winners. You have to have conviction in yourself, have conviction in your plan, and hold the stock as long as the key moving averages are holding. You could see this stock hasn't gone below the 8 EMA once, which is this blue line, right? And so far it's just kind of going vertical. There's really no reason to sell until it closes below the 8 EMA, breaks below that. So I'm not selling this. Even though it hit 3 of my targets, I'm still going to continue to hold it because there's really no reason to fully sell the trade out yet. And you should continue to hold it as long as the key moving averages are holding. And the last thing is you have to make sure to use the big time frames. Use the weekly, use the daily, because there's so many good setups on lower time frames, but every single stock could be setting up on the lower time frame. You want to look for the stocks that are special, right? It takes a long time to set up on the weekly, on the daily. And if you wait for those type of setups, you're going to see way better results when it comes to your trading. So I hope everyone was able to get something out of this trade recap. Massive trade for me. I know a few of you followed this with me in the Discord, and it was an absolutely amazing one. So I hope everyone was able to catch it and learn how to, look for these type of setups, and you'll be able to catch some more of these in the future as well. Like and subscribe, and make sure to comment what you want to see next in the next video, guys. And I'll see you all in the next one.